The upper tribunal has released its decision in relation to the VAT charged on mega marshmallows. To give you a hint, it turns out that size does matter to HMRC. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where the VAT treatment of huge marshmallows has been decided after a lengthy debate on whether they should be standard or zero rated. HMRC were arguing that mega marshmallows come under confectionery and should be standard rated to fit in with other products in this category. However, the taxpayer Innovative Bites Limited contested that the mega marshmallows were marketed towards being roasted and used to make s'mores rather than just be eaten from the packet. Now, this is one vital difference in the VAT treatment of food products, as this extra preparation would mean that it could not be classed as confectionery. The tribunal ultimately agreed with the taxpayer, meaning that the VAT on marshmallows is now zero rated for tiny marshmallows as they are advertised as an ingredient, and huge marshmallows as they are made for roasting. It is still standard rated for normal sized marshmallows though, as these are classed as confectionery. Netflix's profits have soared since cracking down on password sharing between users, with the company seeing a nearly 15% rise in revenue in their first quarter this year. This rise is also attributed to some of their recent successful releases like Zelda. However, the streaming giant have now said they will stop reporting their subscriber numbers from next year, hinting that they are expecting the new account growth to stall and they want shareholders to put more focus on their revenue and profits. HMRC has issued guidance on the gross payment status compliance test for contractors, which took effect from the 6th of April this year. Gross payment status allows contractors to receive full payments for their work without CIS deductions, making it a highly sought after status. You must pass a compliance test to receive the status, and HMRC have now added a new VAT compliance test to this procedure, which will focus on making sure contractors are filing and paying VAT returns in a timely manner. They have introduced this as an incentive in order to combat fraud and non-compliance. Hotel insolvencies have been increasing, rising by 19% in the past year as hotels are experiencing a wide range of challenges. Businesses are cutting back on conferences and away days, there has been less international tourists in the last few years, and costs are increasing on top of this. It brings back the question of reinstating tax-free shopping for tourists, which many organisations have been advocating for in an aim of attracting more business to the hospitality and entertainment sector. A few employment law changes are happening from April, one of which involves holiday pay. There has been a period of uncertainty around the calculation of holiday entitlement and pay for irregular hour and part-year workers, as HMRC did not have a definite way that this should be calculated. This has been cleared up for the new tax year, however, as HMRC have said that holiday for these workers can once again be calculated by multiplying the number of hours worked in a period by 12.07%. This can be paid as rolled up holiday pay, so as long as it is showed as a separate line on the employee's payslip. Thank you for tuning in to this week's episode of Tax Tidbits. I hope you found these insights helpful, and if so, make sure to like, share and subscribe to watch more of our videos. And we will see you next week. Oh, and remember, size matters.